Roads, said Confucius, are made for journeys, not destination. My guest's journey took her through the quiet portals of Crimson Harvard to the riot and the hustle and bustle of Asia. Joining me on the premier show of RD360 is an old Asia hand, Francis Dydasco, who's a partner at Proa Capital. Francis, welcome and thank you for joining us.
Thank you, Ramesh.
Francis, how many years have you covered Asia?
I've been covering Asia more or less since 1988 when I started in Japan.
And you've also covered India for a large period of time?
Yes, I started covering India in the mid-90s.
You had a romance for India, but you're no longer hot about India, are you?
Currently, right now, we don't have any investments in India. I think I have to say I'm very impressed by the verve of Indian entrepreneurs, which has always been what has attracted me to India. Currently now we have a situation where there's quite a lot of uncertainty from a policy point of view, but I think for us more it's been about trying to find companies that we'd really like to invest in, and at this present point we aren't finding the kind of positive operating leverage we'd like to see when we make an investment, and given that we find it difficult to stomach some of the valuations that we see in the market.
A lot of Asian companies have a huge amount of leverage, money has been cheap, and corporate governance has gone for a toss.
Yes, we typically see this, Ramesh, after we've had a long period where capital is mispriced, that companies start making decisions that are based on rather silly assumptions, which are not sustainable.
And particularly in India, you said that you feel that the operating leverage in Indian companies is not good because A, there's a slowdown, and B, the cost of capital is high.
Yes, and I think the other kind of concern we have in India is simply that if you look at the banking system and you look at the debts in the banking system, although you can argue that overall India is not a very leveraged economy, when you look at the concentration of debt in the economy, it's very high. I mean, India's concentration of debt is as high as in some countries like Russia, which, as you know, is a very concentrated economy. And those are risks for the banking system, which will impair the ability of the country to grow if they're not addressed very soon.
But given the fact that you claim you're a bottoms-up stock picker, I'm sure there are pockets of opportunities in the technology sector, in the pharma sector, not leveraged to India. Why have you ignored them?
The valuations are quite high, Ramesh, and again, we really focus on incremental returns. I really want to see a company's operating leverage going up rather than down. In other words, its operating return on capital employed actually rising. I think part of the issue that we also have with those companies is just their valuation. And I think that if you look at the cost of capital in India, clearly, if you look at CPI, which is elevated and I think will remain elevated, I don't think interest rates are high enough to give savers a return on their savings. And until that takes place, it's going to be very difficult for liquidity to flow back into the banking system, which is what needs to happen for the system to kind of recapitalize itself and reliquify itself. And given that we focus on the discount rate and valuation, if the discount rate is going to still rise, basically if the CPI, if there has to be a positive real rate over CPI, then that means the discount rate still has to rise. In that environment, it's very difficult to argue for high valuations.
Interest rates already so high in India, they're absolutely sky high. I understand that, but let me put this proposition to you. 20 years you watch global markets. India made a new lifetime high, whereas China is still way below its 2008 highs. All right. So how do you, as an analyst, explain that money is chasing in India, going out of China perhaps? So why would you not be in India as opposed to China?
Well, actually, it's funny that you say that, actually, Ramesh, because we are very interested in China, and China strikes me as being where India was in some senses back in the mid-90s when everybody dismissed it and no one, you know, if I said software company India, people would look at me in askance. And today, if you look at kind of capital discipline and China, again, people would look at me in askance. But if you look at the private sector in China, for the last 3 years, they've really suffered from a very high cost of capital. I mean, money is very tight for, particularly for a private sector company. And as a result, and of course, there's been a slowdown because of the export sector. So that's actually imposed a lot of discipline among smaller companies that do not receive subsidies from the government. The problem has been the state sector, which really has not had the same level of discipline because the state banking system and policy essentially supported that. But what's really interesting, I think, about the current moves that you see in China is there's a recognition. I think there's been some recognition for some time that this has to change. But you're starting to see some sense that this time they're quite serious about it. For example, allowing interest rates to rise. You know, the 10-year rate has been slowly rising. Allowing there to be temporary liquidity crunches from time to time, just to kind of give the whole system a bit of a check. So we're starting to
check or
see
shock?
a shock. Check. Well, so far it's not a shock, and I don't think they want a shock, to be honest, because
they almost did that a few months ago.
But an outright liquidity and crisis in
Right.
China would be terrifying, not just for China, but probably for just about everywhere in the world.
Be a global hard landing?
Yes, but I think that's very unlikely. I think that they will be able to manage the liquidity situation just to keep liquidity flowing, because it allows them to restructure. If you look at the top stocks in China, actually many of them have a positive dividend yield gap, which again, this is sort of counterintuitive in China, but there are companies that have a positive yield gap of 300 basis points.
There's a classic dilemma that you face here. There's a plenary congress that happened in China, which made very important decisions. There's a general election, which is usually important in India. How would you rate these two events?
Well, they're very different, obviously. The decision-making process in China and the lead-up to this has been going on for some time and discussed behind the scenes, so that by the time it actually comes public, it's actually more or less decided, at least in shape, and then it sort of percolates down. India is a very bottom-up country, and if anything, I think the democratic process, a lot like my own country, has become even more fragmented. And so decision-making is a summation of many, many small decisions. And unless there's one centrifugal force that kind of binds it together, it can kind of have a life of its own. And I think that's how I see India now.
Don't you feel that the new election, if a new party comes into power, it could be a catalyst for the Sensex, the Nifty, to make new highs? It is already a new high, but significant newer highs.
On sentiment, I can see that. I mean, but remember, we also had a huge rally when the Congress won a vast majority. You remember that date?
Of course, 20% up.
Yes. So I think there'll be a sentiment impact, but as you know, that once we settle down to the hard task of actually governing, there's a lot of reality that has to be dealt with. And the reality in India is that power is quite dispersed. And so I think we have to wait and see how actually things kind of come together. I think obviously the vision being presented by Mr. Modi is one of rational economic development, but I don't sense that is a buy-in across all polities in India. And I think he's going to have to convince people and bring people along with him as he goes, and that's a process.
But even in basic decisions, whether it's the Congress or the BJP, there's no real right-wing economic alternative. They all oppose FDI in retail, favor Narega, favor food security. So there may not be really great policy change, as you correctly say, just style change.
I think that the real thing that would make progress in India would be some very simple reforms. For example, just having a basic roadmap of what is the collective objective that we're trying to seek, Are we trying to grow the economy and divide it? Because without growing the economy, it's very difficult to divide it into bigger and bigger pieces.
Which is what he does. I tell you what, hold that thought. We'll take a break. We'll come back and chat some more with Francis on RD360.